So capital gains is when the stock goes up in value, the stock price goes up. A dividend, the other one is dividends. Dividends are just portion of profits at the end of like a company's either month, quarter, year, and some companies do dividends, some companies don't. It's just how they calculate is basically like, let's say you have 10 shares of a stock, right? Of a mutual fund, right? And the dividend is $1 per share every year. Well, that means the number of shares that you own times the dividend price is how much money they're going to give you, right? So like, let's say you have 10 shares and it's $1 per share, you get a $10 dividend at the end of the year, which is cool. Now that doesn't seem like a lot of money, but as you continue to build your portfolio and create bigger amounts of your portfolio has more and more stock in it and more shares, like shares, then you see that number grow over time. So there's different, like some companies do dividends, some companies don't, but capital appreciation and dividends are the two ways to make money in the stock market, right? Now, we're going to talk about rate of return real fast.